Considering the adverse economic conditions of the country, people are more concerned on the safety and soundness of Sri Lankan banking sector. Therefore, today's presentation is on recent extraordinary measures implemented by the central bank. In view of the prevailing macroeconomic conditions and its impact on the banking sector, CBSL has decided to implement several regulatory measures to support the banking sector to facilitate effective financial intermediation and the flow of credit to the economy, whilst ensuring the soundness of the banking sector. Measure number one, banking sector to maintain a capital conservation buffer of 2.5% to ensure that banks have an additional layer of usable capital that can be drawn down during stress times. An industry-wide flexibility is granted for banks to draw down the CCB if needed, subject to restrictions on distribution to shareholders, repatriation of profits, and submission of a capital augmentation plan to rebuild CCB during a period up to 3 years. Measure number two, current deadline for licensed banks to meet the enhanced minimal capital requirement is extended up to 31st December 2023. LBs which are unable to meet the minimum capital requirement by 31st December this year need to submit their capital augmentation plan, including plans to consolidate or merge with suitable financial institutions by 31st December this year. And these licensed banks too shall refrain from distribution of dividends, repatriation of profits until the minimum capital requirement is met. Mission number three, LBs are encouraged to move to approaches such as the standardized approach or alternative PSA for computation of risk-weighted assets for operational risk for the purpose of computing the capital adequacy ratio subject to supervisory review. Measure number four, LBs are given the flexibility to stagger the unrealized mark-to-market loss on government securities denominated in LKR on account of the recent interest rate hike for capital adequacy purposes until second quarter of 2024, subject to conditions. Measure number five, licensed banks are granted flexibility on the treatment for other comprehensive income for capital adequacy purpose in line with the international standards. Mission number six, deadline for LBs to submit the document on internal capital adequacy assessment process known as ICAAP for year 2022 to the CBSL is extended by 1 month until 30th June 2022. Measure number seven, as a short-term measure to support licensed banks to adjust their liquidity profiles, LBs are provided with the flexibility to operate, maintaining the liquidity cover ratio and net stable funding ratio not lower than 90% up to 30th September 2022. Furthermore, CBSL on 6 May 2022 decided to restrict certain discretionary payments of licensed banks, such as declaring cash dividend and repatriation of profits under the financial statement for the year 2022 audited by its external auditor, engage in share buybacks, increasing management allowances and payments to the board of directors until 31st December 2022, with a view to strengthening the liquidity and capital positions of licensed banks under these exceptional circumstances. The above measures were introduced with the aim of providing the licensed banks with more flexibility and opportunities to operate in these challenging conditions and support economic recovery, whilst taking measures to improve their safety and soundness. CBSL will periodically review the implementation of these policy and expects licensed banks to avail these measures in the best interest of the customers and the economy at large. Reference for this presentation is taken from CBSL press release dated 25th May. Thanks for watching.